Joining us right now with her top picks and what she thinks about the market is Stephanie Link. She is Chief Investment Strategist at Hightower and a CNBC contributor. And Stephanie, before we talk about your three top picks, why don't we talk about this ARM IPO that's happening today? It's really captured the attention of the market. A huge IPO, but if you're looking at pricing, it's relatively expensive. The only semiconductor that's priced more expensively would be NVIDIA at this point. What do you think of ARM?
Yeah, I mean, it is it is an interesting story. It is very expensive, though, at 20 times revenues. I think that the more important aspect here is less on the stock and more on activity in capital markets is starting to pick up, which is very interesting. And it coincides very much so with what James Gorman, the CEO of Morgan Stanley, has said in the past month, that capital markets and investment banking is starting to pick up. And I think that's very encouraging and it's very healthy.
Makes you feel better about stocks overall, just because kind of juices are flowing again?
It does, absolutely. And for the capital market stocks, too. So I think a way to play this ARMS deal is by owning something like a Morgan Stanley or a Goldman Sachs or even a Bank of America. Those stocks are kind of left for dead, if you will, right? They've lagged so materially this year. And so I think there's some opportunity here.
Okay, let's talk about your favorite stocks right now. Part of that is the consumer, what you're thinking about things. You own TJX. You think the consumer's in pretty decent shape?
I do think the consumer is in pretty good shape. It's been very resilient, and that's because it's empowered by the job market, right, and higher wages as well. Inflation is certainly hurting to some extent, but that's why I like the off-pricers, because all of this excess inventory in the retail channel is going to help the industry, the off-pricers. Plus, people are trading down to some extent, and they like the treasure hunt. And the long-term algo for TJ is like 2 to 3% same-store sales growth and gross margin expansion, as well as market share increases. They've got about 46% of market share. I think that can get to 50% over the next couple of years. And so remember, last quarter they grew comps at 6% and gross margins expanded 254 basis points. And that was helped by better pricing as well as freight costs coming down. And I think that's going to continue to be the theme throughout the rest of this year.
Stephanie, we've been talking a lot about oil prices, how they're picking up again. You've got a play in the energy sector. It's Halliburton. Why you look at that stock?
Yeah, so the energy stocks have certainly caught a bid over the last couple of weeks, and I'm looking for some of the laggards. And Halliburton has lagged. It's only up about 7.5% year to date versus something like Schlumberger, which is up 15.5%. The stock trades at 14 times forward estimates, and it's the leader in the U.S. onshore market. And I think their international exposure is underappreciated. I also think that you're starting to see a balancing in the supply demand in pressure pumping in North America. That should lead to better pricing. And all of these oil field services companies, Becky, have really implemented technology for pricing power. And so this company is doing the same thing. They have this electric pumping business, this technology that's helping their customers become much more efficient, gives them more pricing power. So again, I like it because it's cheap, and I think you're going to see a second half of the year better margins.